your fund is long-short fund, whereas this is a long market, Rajesh. So tell us, I mean, how does this work now? I mean, at these levels where the market is, I mean, last week, for example, the market went up 10%, right? And the rally is becoming it's becoming very broad-based.
Yes.
So explain what you do at these levels.
Well, basically, it's not as if the long-short equity funds cannot participate on the upside, in markets like this. Of course, I think it's, as you point out, the market participation has been extremely broad. So it's not been easy to catch up with, the Nifty trade by itself. But I think, it's not as if we are not participating, on the upside. Let me actually tell you that today, even more, a long-short fund is sought after. Actually, globally, there is a rush towards macro-driven long-short equity funds. In fact, funds have had to refuse investors fresh money. Look at it from an Indian context, right? What is the value add of a long-short equity fund? Today, you are in an environment where interest rates are extremely low. So if you invest in a liquid fund, for instance, you're getting 3%. And the inflation is probably 5%. So you're actually making a negative real yield. But you come to a long-only fund or participate on the equity on the upside. Today, you're looking at an index of 50,000 plus, right? And of course, investors are scared whether they have to enter the markets at this level. What does the value add of a long-short fund provide? Basically, protection on the downside in case the market reverses. So you can make an equity type return and yet, protect the downside in case that does occur, thanks to a long-short equity fund. I want to draw a point which is probably very underestimated in the Indian equity markets. A lot of us follow Warren Buffett, but do you know what his first rule is? The first principle, rule number 1, don't lose money. Rule number 2, never forget rule number 1. The markets we feel are up about 100% from the bottom. But they are only up 20% or so from the last peak of February, last year. So, this mathematics of declines, because the market went down 40-odd% and then has come back 100% odd, has meant that it's only up 20%. So if you were to protect capital during the downside and able to make, a return, you're actually reducing your risk and yet making an equity type return. So I think even more today, the virtue of a long-short fund, which is to protect downside and make an equity return, is more being noticed by investors, India and globally.
Rajesh, morning. This is Reema here. I'm just curious about, what are you going short on? Everything is rising in the market. So what are your strategic or tactical short positions now? And if you could tell us the reason why.
So I think our short book is far lower, relative to what we would have had on normal market conditions. See, we have to realize what kind of an environment we are in. And I've kind of talked about this earlier as well. This is basically an acceleration of P ratios of the equity class, thanks to what has happened globally, right? With the kind of liquidity unleashed. And today, India, the thesis of India is that we are at the start or cusp of an earning cycle, cusp of a new credit cycle, right? If that is the thesis, then the breadth, as Prashant pointed out, of the market is going to be far broader. And therefore, it's not as if you'll be able to point out sectors which you can show. You will have to find companies which have weak balance sheets, companies which are not, delivering well. And that's unfortunately now a smaller canvas. We are okay with that, given that we are also participating on the upside. And until we find an alpha opportunity, we are okay with contracting the short book. This is not really a short market. This is a long market, and we have to recognize that.
Okay. Rajesh, so is this, so let's now get to your views per se. Is this run going to continue uninterrupted in your opinion? Or what's your sense? Yes.
So I'll make 2 points there. See, one is the key takeaway from what's happened in the US. Joe Biden, as president, has come in and has said, my first priority is to get unemployment to a normal level, right? Which is about 6.7% at this moment. He wants to get it to 3.5%. which means he will do everything that is required to get to that 3.55% level. And they want to do it fast. They don't want to have more people unemployed for longer. So they've pushed a $900 billion bill in December. They're already working on a $1.9 trillion bill again. And after which he says, we'll work on another $1 trillion or so of infrastructure, bill. So there's going to be a lot of spending. And the Fed is also going to be equally supportive, which means this liquidity environment and the unleashing of spending by governments is going to continue for quite some time. So this benign environment is going to continue. So that's one takeaway. How bond markets react and how fearful people get of inflation and therefore the effect on equity markets, we'll work around that. But that's a second step. But that means accentuation of the primary trend. Second is, I think if you look at it from a FI perspective, right, you have a $3 trillion economy. You have a country with the potential to grow 7% or 8% in terms of real GDP. You are at a start of a credit cycle. You are at a start of an earnings cycle. You've had anemic earnings growth for the last 7 or 8 years. More importantly, you have a stable rupee, right? So we have a stable balance of payment condition. So for an FI to push in the kind of liquidity that he has, India becomes one of the coveted markets, which means that the re-rating of equity class per se and India is going to accentuate to a certain level, maybe higher than what we are comfortable with. We are getting into a level where we are starting to discount even financial year 23. And people have incorporated a good amount of earnings growth, at least 19-20% earnings growth even for financial year 23. But I think we are not getting the signals yet that we have seen a top. So yes, I think it will be a little more uncomfortable than what we are used to, given the conditions that I talked about. But there are no indications yet that a top is being reached. So stay invested for the time. But look, we are traders. We can also change our position in case we see something different emerging. But for the moment, there are no signals that a top is emerging.